It is 11/6/2025 here with your nightly watch list video. So, what can I say? A little bit of an expectation breaker, I'm sure, for some people. Let's just go ahead and quickly take a look at the NASDAQ. And we can see that yesterday's bounce was effectively given all back. And today was a pretty nasty downside reversal from yesterday's nice little bounce off the 20 simple moving average. Makes me feel like, there is potential for day two, and a date with the 50 simple moving average is more than likely. When I was talking about it in the room, I was telling people, you get some of these gap ups, and we could kind of take a look at the QQQ. You get some of these gap ups, and these aren't breakaway gaps. These are exhaustion gaps. And when I talked about this in the room, exhaustion gaps tend to get filled at some point. I just didn't know that it was going to get filled so quickly. But of course, like yesterday, I was thinking, okay, a little bit of a pullback in the morning, and then maybe something that's showing relative strength could be something that is bought. Well, lo and behold, I did try some SoFi, not on the first 5-minute bar where it took out prior day highs, but on the second 5-minute bar where it took out prior day highs. And very, very quickly, I was stopped out. That's why I joked. I was literally in SoFi for 37 seconds. I was stopped out right away. Not a big deal. This kind of stop out does not bother me whatsoever. I did obviously avoid all of this nonsense. I did try it one more time towards the end of the day as it was potentially bouncing off the 50 simple moving average, because pullbacks to ascending moving averages have been buyable lately. And very, very quickly, I got stopped out of that too. So that's just some of the reality. And really no big deal. And similar with Tesla, I still own a position from a whole lot lower. But this thing I thought was about to start trying to take out prior day high. Well, I literally top ticked my entry and then very, very quickly hit it with my exit. So that was just kind of my day on the long side. No big deal. Take your exit. Don't sit in this big fade. That's why I always respect my low of day stop. I don't mind this kind of a stop when this was the action on the rest of the day. And ultimately, no real harm done on the long side, because on the flip side of that, I was short Cypher from yesterday. I did get a short into this push when we were rejecting this 25.11 level from a few days ago, and it never went out and took out prior day, or really intraday highs, excuse me. And then this morning, just an absolute dud, getting smoked all day long, which was absolutely fantastic, and a 12% fade, really even a little bit more from my entry. So about a 14% move, if I'm not mistaken. I'm currently up on the position 14%. So if I'm not mistaken, 13.3. So, it was a pretty good fade, and it wasn't just that one. I'm also short Oklo for these past few days from $146. And, I wish I didn't cover some into this push here, but I did. $126. And, we are just fading now 106. So, $20 left on the table on, 7,000 shares. A little bit, kind of crappy when you think about it like that. But ultimately, this does look like it's also going lower, probably going with a date sub $100 fairly soon. And then I shorted some Rigetti this pre-market. I was kind of keeping an eye on IONQ, and by the way, that thing showed a whole heck of a lot more strength than I even expected. But I did get short this pre-market as we started to kind of wash out, and we had our 620 set up earlier in the morning, but just a little too early to be trading. As soon as we kind of started to break down, I went ahead and punched myself in with the stop at pre-market highs, and this thing just an all-day beautiful fade. So that one worked out really well. And yes, I was short from a few days ago, but I did stop myself out yesterday. Did not want to be holding, a potential red position or a flat position into IONQ's earnings. And ultimately, it did nothing. And then IONQ didn't do too much, and we faded. Speaking of IONQ, I also got short this name against the 5-day, actually using the 10-day as my stop. And coincidentally, $59 I was looking at as my stop level, and I should have added a little bit more against the 10-day because that is where I was going to stop myself out. But we'll deal with this one tomorrow. I am also short now IONQ, and it is in the green in after hours. And I do have the expectation that the market probably gives us a little bit more downside. Maybe it doesn't, maybe it does. But the reality is we are seeing a lot of broken setups. The group that has been working well, coal is something that I found really impressive. HCC, Warrior Met Coal, super nice move. And you're starting to see whether it's some of these coal stocks or whether it's the oilers, oil and gas. I've been making mention of this, VLO, absolutely beautiful move today as a nice bounce off the 20-day. The problem is nobody really wants to own these things, right? Nobody gets excited about an 8% move in 3 days, right? Everybody on FinTwit, sometimes myself included, even like, being short Cypher, I want a double-digit move in a day. Well, that's not the reality. I also just want to be in the theme and the trend that is uptrending, and it does look like this potential trend is just getting started. Something like VLO, PARR, this is another one that's just looking, pretty dang fantastic, potentially going into the week and into next week. And all of these names that are holding up in the oil space are doing it without the help of crude oil. So if you actually look at crude oil itself, not much to speak of in the crude oil sector. So really, these stocks are just working, and they're working on their own. Yes, there were some stocks, and yes, there have been some stocks like Lemonade, which gapped up. But again, today, not much going. It's part of the environment. Datadog, I thought was really, really nice. But again, do we get more follow through from here? I really don't know. It's possible. Maybe this is playable as a high volume close setup, but not something that I take, especially if the market's going down. I kind of hands off on tech for a moment. And really just everywhere, you looked, it's like you had that beautiful bounce off the 20-day for AMD yesterday, probably got some bulls, in there off the 20, and that's totally fine. But I'm assuming those people were getting stopped out today underneath that 20-day as well. NVIDIA with some weakness, and we talked about this one yesterday, just some odd weakness into the close. And then all of a sudden, right, this is some big weakness into the close. And then all of a sudden, a little bit lower. I don't want to make too much of a big stink about this one because it is still above the 50 simple moving average, but ultimately not the best look here. Tons of distribution coming in for the last handful of days. Microsoft, another one, just distribution. First of all, you gap up on earnings after a really, really nice move. And then you go nowhere for a quarter. Then you gap up on earnings again, and then you're just sold into again. I mean, this is just, how many red days in a row is this? I think this is 8 sessions in a row, just red day after red day after red day. That gets pretty exhausting, and you're living under the 50 simple moving average. You're basically back at September's lows. So you've been going nowhere for 2 months. That's not the best. Tesla, one I do still own. We'll talk about it again. Elon did get his pay package approved. You did get a little bit of a spike, and you are going nowhere. I kind of prefer that personally. Let the 50 simple moving average catch up, and then eventually we'll have a nice flat base breakout potential over the, maybe it'll take a couple of weeks to really set up and tighten up that right-hand side. Let the 50 come underneath, maybe another week or two. But ultimately, if the market begins to break, Tesla probably gets taken with the market, and that's just the reality. I still have my ARK, my buddy Alec convinced me. I do own it from 59. It's a trim position. It's a small position. I was going to exit it on a close below the 50, and against my better judgment, I held it. We are coming back into the top of this base breakout. Anything below this 100 simple moving average and that $78 level, I will be gone. It's down about 9% this month, basically in November. It is what it is. I really was thinking about closing this thing below this 83.5 level. I got a little bit stubborn with it. Again, it's a trimmed position. I own it from 59. I've had it for 5 months. So, I feel like I've kind of earned the right to just let it work for a little bit longer. And if I'm going to be wrong, right, I'm going to be costing myself an extra $2. Such is life. Not that big a deal. I bought BABA yesterday, And really, really nice strength in BABA today at one point, and then at the end of the day, kind of closed weak, gapping down just a touch. But so long as we are above the 50 simple moving average, I think I'll just hold on to this thing. We'll see what happens with the Chinese equities into tomorrow and over the weekend. If it comes too close to flat, I will cut it. Cypher, like I said, I shorted this yesterday against this 25.11 spot. Really, really nice job unwinding today. Iron had earnings, and I'm hopeful for a little bit more. And again, this one too hit this 74.15 level. I almost thought about shorting this thing today against 74.15 as we were working our way back through, but I did not. I'm hopeful for a bit more unwind, and then we'll see kind of what happens into tomorrow really with Cypher. But I'm in Cypher. I don't necessarily need Iron, but I'm kind of using one off the other. SMR had earnings today, and like I mentioned, I am short Oklo, and this thing rolls over some more. We are basically hugging the 200 simple moving average, but this thing has been an absolute laggard. Will not be too surprised if we are breaking the 200 simple moving average, just like a lot of these other speculative stocks. You could even look at like a QUBT, another speculative stock, on the quantum space, trying to break this 200 simple moving average. Speculative money is literally flying out of here. MP, another one, obviously I talked about this, an absolute shit show. You go from 100 all the way down to 52 today, and then now you're at 48 on earnings. Just absolutely disgusting. And I still have Tesla, as I mentioned. So I've got a few more shorts than I do have longs. Part of the reason is that's the side of the market that's been working easiest for me. There have been some names that have been gapping up on earnings. That's great. I haven't been really chasing those as setups right now. I'm kind of waiting for continuation setups on the names that have gapped up on earnings. I'm expecting, the market to support those names if those are indeed going to go higher. And really, if I just like kind of scroll through my watch list, there is not a ton, right? Like you had FSLY up today. Great. Does the market support that, down the road? Datadog, does the market support this down the road? Great, that's new merchandise. SITM, does the market support this down the road? Great, but you look at this bar, like how the hell do you get one situated in this thing as a potential 5-minute opening range break, and then you're buying this thing at 358, 359, and then all of a sudden this thing is closing like 20 points lower. Very, very difficult to do, which is why I am personally waiting for continuation setups. I am not buying earnings gap ups at the moment, especially not while the market is going down. And personally, I am gaining next to no traction on the long side as much as I would love to be, right? I've tried SoFi. I tried it twice. Didn't work. I've tried TEM a few weeks ago. That didn't work. I've tried putting on some TSM on the reclaim of the 20 simple moving average a few days ago. That did not work. I tried putting on, and this would have been right in here. I tried putting some on. That did not work. It closed far too weak. I tried putting on, adding to my Dell position, and then eventually I got stopped out of the whole thing below the 20 simple moving average. I tried adding more right here. That did not work. I ended up closing it right in this little consolidation before the close. And ultimately, SMCI went lower, and Dell kind of followed along with that. And, if I were still holding, I'd now be red on my position. So made a couple of coins, right? I bought this on 1023, sold some into this little left side resistance at 166. That ended up being the right decision. And ultimately, things are just rejecting. Is the market going to go higher? It's totally possible. Is the market ready to go higher tomorrow and today was the bottom? I personally don't think so. I think the market could use a little bit more pullback. I think that would be the healthiest thing that can happen. And part of what gives me that impression is there are not enough setups out there. There is new merchandise, but there are not enough setups out there that have enough weighting to them. Your Microsoft, your Nvidia, even your Palantir. Like, guys, when you lose your 50 simple moving average, right? I don't want to be a Debbie Downer, but at first it looks, like no big deal, a big washout into the 50, it could bounce. It very well could bounce, but then there is no setup here to go long. You're just effectively buying it as it's reclaiming the 50, expecting it to just go make a new all-time high? I guess. But there is not really a clean setup here where I go, yep, that is ready to go and make a new all-time high. Again, maybe, but there's nothing tight about this. You get dumped on earnings, and then you've also got a Meta that dumped on earnings and living below the 200 simple moving average. Somebody even commented to me a few days ago while I was on live stream, Ariel, do you think that Meta is ready for a bounce higher? It's gotten a little overdone on the short side. Really? Tell me about overdone if you go ahead and look at Deckers. When you lose the 200 simple moving average, how do you know we're just not like right here with Meta? And then all of a sudden it gets worse and worse and worse. And like, you don't know. So my best suggestion, if that person may or may not be listening, is when it's below the 200 simple moving average, leave it alone. The best moves occur when it's back above the 200, right? That's when the best moves occur. When it's below, I could show you a dozen of chart examples, dozens of them, where it doesn't end up working out too well. And again, I don't want to compare a Meta to a deck, but the reality is nobody knows where the bottom on any of this stuff is. You don't know when the market will start to act a little bit better, but there is distribution going on in the market. We've had these breadth metrics where it's like, and only really one of two things can happen in my opinion. You get the leaders continuing to hold up well, and some of them aren't holding up so well. Palantir, Meta, Microsoft, NVIDIA, like, okay, CLS is doing okay, SNDK is doing okay, MU is doing okay. I got to give some credit to the banks. JP Morgan is holding up really well. Bank of America is holding up really well. I got to give credit to the financials. They're holding up really well. So we've got a couple of things, that can happen here. It's that all of the names that have gotten washed out start to find a bid, start to build out their bases, start to push higher, or option number two is the market begins to roll over under the weight of the leaders starting to come undone, which might be something like Tesla or NVIDIA or more Microsoft, or finally Apple gives way under the weight of the market, right? Where it's just like, okay, I'm trying to hang in there, but it just can't, because it can't carry everything. Apple is the place, when you need some liquidity, you go to your Apple winner because the rest of your portfolio is getting its ass kicked. And that's just kind of what happens. And if the market begins to come down, I would suspect that, even your SNDK, even your MU, those will come under pressure too if the market really stays heavy. To me, I still think the XLV ETF is one that is very, very interesting. I thought that this thing held in there really well today. And you've got, Lilly being one of the stocks that is holding up best in that scenario. Not buyable here. I thought it was buyable on 1030. Not buyable here. Really, really nice push. I would suspect that, maybe this thing is going to $1 trillion market cap. But again, I don't know. TMO is another one that is hanging in there really well, despite what's going on in the market. ISRG is another one that I think is hanging in there really, really well. And even Gilead is another. I mean, this is just gorgeous. And then something like Gilead also hanging in there right up at highs. So it's the XLV ETF. None of these names are sexy. The Oilers, none of those are sexy. All of the sexy stuff, it is kind of getting its butt kicked. KTOS yesterday had earnings, and gap down, followed through today, followed through even more to the downside. That's not so great, effectively giving up this entire push. My Rocket Lab, which I closed already, also giving it up in a pretty big way today. And I closed my position on 11.4. So that's just kind of the environment we're in. And if you're not respecting risk, all of a sudden the last of your shares end up going red or flat. And that's not too fun. I definitely don't like round tripping gains. So I did sell some up into strength. That was the best thing I did. I sold some when it was extended from the 50-day. Best thing I did. I stayed patient with the rest as best as I could. And on 11.4, I took my exit. And I'm not sitting in any of this shit show. Like I said, we could bounce tomorrow, but that doesn't really mean that there are buyable setups. Do you want to buy something as it's reclaiming the 20-day? Fine. Do you want to buy something as it might be reclaiming the 50-day? Fine, and then use that as your guide. But ultimately, I don't see enough merchandise that has enough weighting behind it to actually move the markets higher. You have to be focused on the individual stocks and the groups, which are kind of bucking the market trend right now. The XLV is one of those. The Oilers are another one. Again, two groups that people probably just hate, which is another reason why they can go on to work so well. Meanwhile, everybody will continue to look for the lows on some of these stocks that are just getting hammered. So it is what it is. Hopefully that helps. That's kind of my thoughts at the moment. And I will see you guys bright and early tomorrow morning. Cheers.